Stock Tracker Trading. Today we're going to be doing something a little bit different. I just want to go over some news articles and kind of think about where we're at as an economy, where we're at trading. And I'm basically going to go through some things, and then I'm going to show you the charts and show you what the charts are saying that confirm the articles that we're reading. So like this article here, it says a 35% dollar crash is coming. Watch for these things. And so that was just June 17th, just a little bit over a month ago. I was talking to my mentor who had a multi-million-dollar business globally who ended up selling to a Fortune 500 company for over $500 million. So he knows what's going on. I said, what would happen or need to happen for the dollar to crash 35% or more? And he said, if countries stop wanting to use the petrodollar. And so I dug into that a little bit. And the petrodollar, of course, is every time you buy something from oil from any country, you first have to put it into the US dollar, which is great because that gives the currency value, right? So it used to be by the gold standard, no longer is it by the gold standard. Now it's kind of hyped up by the backing of everybody using our currency to buy oil, which our currency is the only currency in the world that does that. Now, here's some of the problem. The problem is that creates us to be the middleman, right? We're skimming off some of the money for ourselves because of the value that we're creating by having the petrodollar, which then takes away from the person buying and selling because they're having to give us a percentage of that value. And some of the weird things around what he was saying is, look at how oil prices went below value. Isn't that strange? I've never seen it in my lifetime. Have you? So here's the article. Since 1944, the U.S. has been propped up by the petrodollar scheme. Now, that's an interesting term to say scheme because it benefits the United States. But the article goes on to say, and with oil prices below zero, the dollar could easily collapse. Ding, 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 ding. That's what my multi-million-dollar friend said. The question is, why would you want the petrodollar to collapse? And if you follow this graph on the New World Order, the first thing you see for this to change and have a downturn is an economic downturn. And what did we have with coronavirus? We had an economic downturn. Not just the United States, but the whole entire world was fighting against this unseen little enemy, but having a real effect on people's healths and the economy. The next phase is printing money. We've not only put out one stimulus check, we are putting out another stimulus check, just printing money around the clock. Next on the graph is credit, giving people credit. What do we see here? SBA provides loans for small businesses. I know lots and lots of small business who got these huge amounts of loans. Next is revolutions. Have you seen things in the streets that you've never seen before in the United States? The next is debt. I don't know that we've seen an announcement yet on this, but at least they're giving us the foresight. 4 giant U.S. states are about to go bankrupt August 5th. And the last one is political reconstruction. What are we about to come into right now? United States National Election Day, just in a couple months. So if we go down this list, we would see we've already had an economic downturn. We've already printed a bunch of money. We've already given businesses a bunch of credit. We have riots in our streets. We are at the point where states are starting to say we are in debt. And we're coming against a political reconstruction. And if that wasn't enough, here's some other warning signs that I see. That banking standards are starting to tighten while the Federal Reserve encourages lending. I know of a couple stories that have happened in the last month. One was a contractor who had a lot of passive income apartments, but he was trying to build another unit and it was $45 million. He can't find a bank to fund that project, even though he has millions of dollars coming in a year off of his other projects. I know another contractor, he had a $1.5 million job that they couldn't get funded for because the banks have tightened up. I know housing lenders have tightened up their standards. They are not giving money to people who are self-employed. I also know they tightened up on the jumbo loans, basically saying anything over $540,000, they weren't going to do a loan for. So how do you expect the economy to grow when you're not allowing the fundamental rights to lend money and borrow money to make money? The next warning sign is to pass a bill for the states to get $3 trillion to help out with the economy downturn. States can't just print money like the federal government, so then what do? They shift money from one place to another to maintain what they have going on until they can get a stimulus bill passed. The other thing they might do is they might keep a state lockdown going so that way the economy doesn't come back to life. If there's no economy income in these states, then there's no taxes. That's how a state maintains all of the things that it's doing, is through the taxes that we pay. Other warning signs: why does the US seem to have a shortage on coin supply? It must be a big deal because they have a US coin task force who's going to figure out what's going on. I wonder if this has anything to do with that. The House wanted the stimulus payments to go to e-wallets. That's right, Bitcoin currency wallets. Some other head-scratching news: Warren Buffett sells $2 billion of Wells Fargo, almost $3.5 billion of JP Morgan, and hundreds of millions of Goldman Sachs and PNC. In total, $7 billion. And if that wasn't enough, he put his money into gold. UGL, DGP, GLL are all commodity ETFs that you could be buying. Here's another warning sign: Warren Buffett's favorite market indicator spikes to a record high after the US GDP plunges. This was less than a month ago. Yep, here it is. Market cap to GDP. Back in 2000, before the crash. In 2007, before the crash. And right now, 2020, before the crash. So what should you do to hedge against this possible dollar crash inflation? Well, you could invest in these precious metal commodities or these energy commodities: natural gas, gasoline, oil. Agricultural commodities always do well. Or industrial commodities like copper, rare earth. Here's CL, light sweet crude oil, up 575% since those negative levels. Here's gold, up almost 45% from the crash. How about copper? Also up over 45%. Natural gas up almost 75% from the June lows. I hope you watched our video about entering in down here at these $1.60 levels. How about platinum? Up 75%. Here's a trade we all wish we were in: random length lumber, up 240%. The reason I'm showing you these commodities is because somebody knew something's going on in the world, but they bought here as a hedge and have made an incredible amount of money. My question is, what are you going to do about this news, about this information? What are you seeing what's going on with the economy? What are you seeing going on with the dollar? From these highs over here all the way down to these lows, it's showing us that the dollar fell off 40% in 6 years. What are some other things that we see from the chart? Well, if we take from these highs down to these lows, that is a 17% fall off. It's the exact same fall off right here. It's the exact same fall off right here. If we look at the fall off from here, that's about 9%. The fall off here, also about 9%. So this could fall off 40%. We understand that. We might have a 9% fall off and then a 17% fall off. So what do we see in this chart? We see that from these highs down to these lows, that's 17% fall off. We see from these highs to lows, it's 17% fall off. We see from these highs to lows, it's a 17% fall off. What else do we see? This is a 9% fall off, and here is a 9% fall off. We have this really big fall off that is around 40%. If we take that information, we see that we've already had a 10% fall off from these double top highs over here. Why did we stop right here? Well, because we landed support. So what should we anticipate? Well, I like the first overtrade. So on the first overtrade, we have support, we broke that support, and now what? We find support there, put our Fibonacci on it. If this holds this support and price starts to come back, we know that we are looking for a retracement on a fib level. So what fib level are we going to use? We're going to use the 38 fib level. And where does that come into? It comes into support and resistance right in here. So we should be able to anticipate at around $96, hitting our heads on this resistance and coming down to this $85 range, which, you guessed it, would give us 17%, just like we saw on some of those other down moves. Now, what would it look like if we went down 35%? Well, we have this double top. If we were to use this as the highest highs and we were to bring down our line tool down to these bottoms over here, we would see that we're in the 30% area of a retracement to these lows. I do understand that's a big fall off from over $100 down to $70. But what if? Another thing we might see if there's weakness in the dollar is against this resistance, TQQQ, start to fall back off of these highs. Another thing we might see is silver go from $25 up into this $50, $55 area. Kind of like this huge run it had back in 2010. Let 2010 happen again. Could gold find support around this $1,900 level and go all the way up to $2,700? If Bitcoin breaks above these highs, range box duplication takes it all the way up above 20,000. If it really has legs, this range box could be duplicated all the way up into 35,000. All in all, thanks for letting me rant about my conspiracy theory. A lot of times we hear fake news, and we think everything we read is fake news. But to me, there's a degree of truth in everything. So I at least want to be aware of my surroundings when I'm trading in the next coming months. We've never seen the world on pause. We've never seen manufacturing, building. We've never seen what we've just gone through with the world. So we don't know the results yet. So I just want to cautiously approach my trading in the next couple months. If it's moving 50% into commodities from my equities, or if it's trading less of a dollar amount when I make my trades. Don't stay in the euphoria of, look at how much I've just made. They actually called it in the Great Depression the hope rally. And people thought the depression was over because the rally in the stock market went up. Well, guess what? Why is the stock market going up now? Because tons, trillions and trillions of dollars was given to us as Americans to be able to use that money to invest. We just came off our greatest 2 years of economy also. I've talked to tons of businessmen who in the last 2 years have made more money than they've ever made before. So my question is that rolling over to where we are right now? But now with the banks stopping, with some of these programs running out of money, could the economy take another downturn? Let's see. I hope you're ready.